Is the bond market at this point correctly reflecting what's going to happen next year with both inflation and the Federal Reserve? Have you been surprised that you still have a 10-year near the 150 level? The 2-year obviously is up of 25, 26 basis points since the pivot, but still just yielding, 70 basis points? Obviously, it's up in the last couple of days. Have you been surprised by the failure of the bond market to incorporate either inflation or Fed rate hikes?
I think what's going on, I've been on Wall Street, Steve, 47 years, and I think what's going on is that the Fed, as you know, was established by the Federal Reserve Act in 1913, and they're a part of the U.S. government. We talk any number of times about the presidents and the governors of the Fed being independent, which they are, but the institution itself is part of the U.S. government. And with the current administration and all the things they're trying to do and the tremendous amount of money that they're trying to put on the table, the Fed has been holding interest rates down by buying securities. And while that may change to some extent in the next 6 months or so, it isn't going to change enough to catch up with what I call the inflation rate, which I peg, as I said, at 8.2%. We're not going to be anywhere near that, period.
Mark, I'm going to ask this question to almost every viewer this morning, and I'll give you the first crack at it. As the market correctly incorporated the potential risk here that the Fed may have to do more than is currently forecast or built into the market in order to get a control of inflation?
I think there are two issues there, Steve. One is the COVID issue. If the situation deteriorates from here with the new variant, the Fed may be forced to shift its position. And two, the inflation rate. Historically, when we have a producer price index, which is at an all-time high, it influences the consumer price index in the months to come. And so we're going to have more inflation. I make a joke. I say that the Fed's word transitory just means that inflation is transited from one sector of the economy to another, with food up almost 20%, with gasoline up 60%. This is taking a real toll on a lot of Americans, either when they go to fill up their car or when they go to the grocery store. And it's a serious event as far as I'm concerned.
So is there a risk that they end up having to do more?
There's a risk that they're going to slow down, in my opinion, because of the variant and what it's going to do to the economy. Do I think they're going to up the taper amount? No, Steve, I don't.